Welcome to the deep dive. Today, we're really digging into a big one, eToro's Q2 2025 results.
Yeah, and it's a pretty significant one, right? Their first earnings report since going public.
Exactly. So lots of eyes on this. Our mission today is to cut through the noise, pull out the key insights from their performance, especially those earnings numbers, and what they're saying about the future, the forward guidance. We want you to walk away really understanding what mattered.
Okay, let's get into it.
Right. So eToro dropped these Q2 results. As their first public report, like you said, there's a lot there. Let's start right with the financials. What were the headline figures? Did they meet what the analysts were expecting?
Well, yeah, if you look at the adjusted numbers, the non-GAAP ones, they actually had a pretty strong quarter, mostly beating expectations.
Okay, non-GAAP.
Yeah.
Just quickly, that means adjusted, right? Taking out certain costs.
Exactly. It gives you a clear view of the core business, often stripping out things like, say, the one-off IPO costs, which we'll touch on. So their adjusted earnings per share EPS hit 56 cents, which was nicely above the analyst consensus. That was around 51 cents. And their net contribution, that's basically their net revenue from users after direct costs that grew 26% year over year, came in at $210 million.
Wow, 26% growth.
Yeah, and that beat expectations too, which were closer to, I think, $195 million. Then you've got adjusted EBITDA, another non-GAAP measure of profitability, up 31% year over year to $72 million.
So pretty solid numbers across the board on that adjusted basis. What drove that?
Primarily, it was just increased trading activity on the platform, more people trading more. And for the EBITDA number, they also pointed to pretty disciplined cost management playing a big part.
Okay, but here's a twist, isn't it? Despite beating on those key adjusted profits, eToro's shares actually took a pretty noticeable hit after the announcement. So
Yeah.
what's going on there? Why the disconnect?
Right, and that's the crucial question. It really shows you can't just look at the headline beats. While those non-GAAP figures looked good, their standard GAAP net income, that's the official accounting number, was $30.2 million. Now, that was actually slightly down from Q2 last year. But importantly, it included about $15 million in costs related to the IPO and things like that, one-off stuff.
Ah, okay. So not really a fundamental issue with the profit engine itself.
Probably not. The real kicker, the thing that likely moved the stock, was more about the future, the forward-looking guidance.
Right. What did they say?
Well, the CFO, Marin Shani, mentioned to analysts that the, quote, elevated trading activity they saw back in April, probably linked to market buzz around things like Trump's new tariffs. Well, that activity started to, quote, normalize throughout July.
Normalize. So cooling off a bit after a hot spring.
Exactly. And for a newly public company, especially one in growth mode like eToro, any hint that the recent surge might be temporary, that growth might be slowing down from those elevated levels, well, investors get nervous. They're pricing in future growth, so a sign of normalization can trigger a sell-off. The market's always trying to look around the corner.
Got it. So Q2 itself was strong on many fronts, but the outlook, that signal of normalization, is what likely spooked investors. It underscores how vital that forward guidance is, especially for a new public name.
Absolutely. Understanding the why behind the market reaction, especially those forward-looking comments, is just critical. It's not just about the past quarter.
Makes sense. So putting aside the immediate market reaction for a moment, let's look at the underlying health. What about their core growth metrics? Users, assets on the platform. What are those KPIs telling us?
Yeah, looking at the key performance indicators, the KPIs, they actually paint a picture of pretty solid underlying growth. The fundamentals seem strong. Take funded accounts, for example.
Okay, funded accounts. Those are active users with money in, right?
That's right. Users who've deposited funds, made a trade, they grew 14% year over year, reached 3.63 million accounts.
14%, that's decent growth.
It is. And that was driven by, their usual user acquisition efforts, keeping users engaged, but also significantly boosted by their acquisition of Spaceship, the Australian investing app, back in 2024. That brought in a chunk of users.
Sure, the Spaceship acquisition. And what about the money on the platform, assets under administration?
AUA, yeah. That saw a really big jump, up 54% year over year.
54%? Wow.
Yeah, it reached $17.5 billion. Now, analysts like those at Jefferies pointed out this wasn't just new money coming in, although customer inflows were strong. A big part of that growth was also just the markets doing well. Gains in stocks and crypto boosting the value of what people already held.
So a mix of new money and market appreciation driving that big AUA number. It sounds like they're definitely attracting more assets, not just users. How did the different types of assets, like stocks versus crypto, contribute to the actual revenue, the net contribution?
Good question. They broke that down a bit. Equities and commodities were apparently big drivers for commission growth in Q2. That ties back to the market volatility we talked about earlier. When markets move a lot, trading picks up in those areas.
Makes sense.
And drilling into the net contribution number specifically, they said growth was really strong in capital markets. So stocks, commodities, currencies, that was up 37% year over year. And crypto wasn't far behind, up 34%. So broad strength.
Okay, so growth across both traditional markets and crypto.
Yeah, and interestingly, they mentioned something else. The total number of trades actually declined slightly
Oh, how did revenue go up then?
because the value of each trade went up significantly. The average investment amount per trade in capital markets jumped 54% year over year. And for crypto, it was up 34%.
Ah, I see. So fewer trades overall, but bigger trades when they happen.
Exactly. Which could suggest maybe users are getting more confident, committing larger amounts, or perhaps they're attracting investors with deeper pockets. Either way, it's a positive sign for revenue per user, even if trading frequency dips sometimes.
That's a really interesting detail. It shows how it's not just about activity, but the quality or size of that activity too. And it highlights, again, how much platforms like eToro are tied into those wider economic trends and market shifts.
Absolutely. It's all interconnected.
So moving beyond the numbers now, the CEO, Yoni Asha, sounded really positive about innovation and expanding their reach. We've covered the past, but what about the future? What new things did they actually launch or announce in Q2 that signal their strategic direction?
Right. This is where you see them really pushing forward, trying to build out a much broader financial platform. They talked about 4 main strategic pillars and rolled out some pretty cool stuff in each.
Okay, what were the pillars?
So first was trading. Here they launched 245 traded for 100 U.S. stocks. Big deal for global users.
Yeah.
Trading around the clock, basically.
24/5, Monday to Friday, nonstop.
Exactly. They also beefed up their U.S. crypto, offering over 100 assets now available there. And importantly, they announced this tokenization strategy for U.S. stocks.
Okay, hold on. Tokenization. That sounds futuristic. What exactly does that mean for a regular stock?
Yeah, it's a big buzzword, but the potential is huge. Essentially, it means representing ownership of a real-world asset, like a share of Apple, as a digital token on a blockchain.
Like a digital version of a stock certificate.
Kind of, but more powerful. It could allow for things like true fractional ownership, buying tiny slivers of expensive shares. It could make 247 trading possible globally, not just 245, and potentially make settlement almost instant and much cheaper. It's about using blockchain to break down old barriers. They also made futures more accessible.
Futures too, so more complex product.
Yeah, futures and spot-quoted futures. Gives more sophisticated traders tools for speculating or hedging. So expanding the trading toolkit.
Okay, a lot happening on the trading front. What was the next pillar?
Investing. And here they're really leaning into AI. They launched these AI-powered alpha portfolios.
Alpha portfolios.
Yeah, basically curated investment baskets built using advanced analysis, but also, and this is key, using eToro's own massive pool of retail trading data. So trying to leverage the wisdom of their crowd.
Interesting. Using their own user data.
Exactly. They also partnered with a big name, Franklin Templeton, for some new long-term portfolios, more traditional options. And then there's Tori.
Tori.
Tori, yeah. It's an AI-powered analyst built on large language models designed to give you personalized insights, help you navigate the platform, offer educational support, kind of like having an AI assistant for your investing.
An AI analyst for retail users. That sounds potentially game-changing. Very interesting.
Okay, what were the other pillars?
Third was wealth management. Here they pushed into French savings products, things like retirement plans, life insurance, making the platform a place for long-term, tax-advantaged saving, especially in Europe. And they expanded recurring investments, automated deposits into the UAE.
So broadening the financial planning aspect.
Yeah.
And the last pillar.
Neo-banking. This was mainly the Europe-wide rollout of their eToro money card. Ah, the card. What's special about it?
Well, it's not just a payment card. It offers 4% stock-back rewards.
Stock back, so you get stock instead of cash back.
Exactly. Spend money, get fractional shares. Plus, premium travel perks, 0 FX fees. It's about embedding investing into everyday spending, trying to create this ecosystem.
Very clever. Turning spending into investing. And alongside all this product stuff, you mentioned global expansion.
Huge push there, too. The big news was getting their capital markets license fully activated in Singapore. That's massive. It basically sets up Singapore as their headquarters for Asia.
Singapore as the Asian hub. Why there?
They explicitly talked about the untapped potential in the region. Pointed out that retail investor participation in Singapore, for example, is still relatively low compared to other developed markets. So they see a big growth opportunity there, bringing their platform to Southeast Asia's growing middle class and digital economy.
Wow. Okay, so it's this combination then. Really pushing hard on advanced tech like AI and this tokenization idea, while simultaneously making big moves geographically, like into Asia. Why is that particular blend so critical for them, do you think?
Well, it ties right back into their stated mission, doesn't it?
Mhm.
Which is, to open the global markets for everyone to trade and invest in a simple and transparent way.
Right.
The AI analyst, the tokenization that's about making investing potentially simpler, more insightful, maybe even cheaper and more accessible 24/7. The global expansion, like into Singapore, is literally about opening global markets to more people. The CEO, Yoni Aja, seemed genuinely excited, saying this tech will transform how retail investors interact with the markets. It's all about using innovation and reach to empower more people financially on a global scale.
It definitely sounds like they're aiming high, not just tweaking around the edges. And it makes you think, doesn't it? How could things like AI analysts giving you tailored advice, or being able to trade tokenized assets any time of day, or having easier access to platforms expanding into your region, how could that change the way you invest in the coming years?
It's a glimpse into a potentially very different future for retail investing.
So wrapping up our deep dive on eToro's Q2, a solid quarter in terms of adjusted profits, user growth, and especially assets, but maybe tempered by that forward guidance causing some market jitters. Underlying it all, though, is this clear, aggressive strategy focused on tech innovation, AI, tokenization, and bold global expansion.
Yeah, and this really brings up a crucial question, I think, not just for eToro, but for the whole fintech space. As they push ahead with these powerful new technologies and move into new countries with different rules, how do they actually balance that drive for innovation? Balancing it with the complexities of regulation, which varies everywhere, and maybe most importantly, how do they maintain user trust, especially when introducing tech that might feel unfamiliar or complex to some people in their global user base?
That's a great point. Balancing innovation, regulation, and trust in this rapidly changing landscape. Definitely something for you to think about. How might these shifts affect your own choices, the platforms you trust, as finance keeps evolving? Thanks for diving deep with us today.